What's up guys, what's up YouTube? This is another episode on the trades we missed last week. So looking at this Monday's trade, we had for ourselves trade number one, and our trade number one was coming from a fair value gap cited on Friday 27th of June, Friday. So we have a fair value gap, and this is called our POI, point of interest. So as price taps into that point of interest, we now have a break of structure here. You can see as price broke this previous high here after tapping into this POI. Then prior to breaking this previous high, we have a fair value gap right here. Now this fair value gap is our indication that okay, when price taps into this newly formed fair value gap, we now have a trade that will be triggered at that point. Now we would have to highlight this fair value gap for a maximum risk to reward ratio. So this is how we do it for our bullish trade here. So we'll put our long position like this. We can put it here at the start of this fair value gap here, because price might not reach our order block right here. So when you use this whole fair value gap, you might not have a higher risk to reward ratio. Now we'll take our take profits. We'll put our TP at this previous high. That is this previous high before this fair value gap. This fair value gap is an indication that price might want to respect a supply zone. Now we have a 4.08 risk to reward ratio, but if you use this order block right here, we might have a risk to reward of 8.9 risk to reward ratio for our number one trade. Now our trade number two here, you can see how price actually respected a fair value gap here. This fair value gap, that was our indication for our TP on this trade number one. Now we have a fair value gap as our POI. This is our point of interest with this order block here. So we have order block and fair value gap here as our POI, and price comes back to tap into that fair value gap and rally to the downside. Now as price rally to the downside, you can see a break of market structure here. So we'd have to wait. We can also wait out this first trade, and you can see how price taps into this fair value gap to actually give us a bearish trade. So this is how we put it for our short position. We'll put it like this. Our stop loss would be above that previous high that tapped into our first fair value gap, which is our POI. Now the trade goes like this. Our take profits would be this previous low, giving you a risk reward of 5. Now we have our number 3. We have our trade number 3 right around the corner here. So now we have a POI here. This is our fair value gap here. So we wait for price to tap into it and give us a break of market structure. Now we have price tapping into it and also gives us a break of market structure here. Now we have a high here. This is not truly valid, but for the fact that we missed this trade, let's put it right here as our trade number 3. So we have a bullish trade here. We'll put our position here. We can put it here right at the start of this fair value gap. So our stop loss would be right below this low that tapped into this POI here, and our entry here at the middle of our fair value gap. Or you can as well use this one, but this would have given you a much smaller risk to reward ratio, and you can see how price rallied to this side, giving you a 3.46 risk to reward ratio. So we can as well use this one here So we can as well use this one here as our take profits. So we can actually use this one here as our entry and use this previous high at this spot here. This previous high right here is going to be our take profits and giving you a risk reward of 3.07 risk to reward ratio. Our next trade would be trade number 4 right here. So we have a fair value gap at this spot as our POI. So here would anticipate that price will tap into this POI to give us a break of market structure, just like so. We have a break of market structure here, and we have our order block and coupled with our fair value gap here for our entry. So let's use this as our entry, and our long position will go like this. Our stop loss is right below this low that's created for us the next fair value gap. So this is going to be our take profit right here, giving us a risk to reward of 3.11 ratio. So our next trade is our trade number 5, and this is how our trade number 5 is. We have a fair value gap right here. This is our fair value gap. This is going to be our point of interest, and we anticipate that price will tap into it and give us a break of market structure here. So we have a break of market structure here, and we also have a fair value gap. So this fair value gap coupled with our order block right here would give us a better risk to reward ratio as price comes to tap it. So as price comes inside that, as price taps that order block, you can see price going in and coming out to give us a bullish trade. Now our bullish trade is like so. Our stop loss is right below this low, and our take profit is right at this high for a 3.09 risk to reward ratio. So that was our trade number 5. Now the next trade is our trade number 6 right. Now the next trade we have is our trade number 6 right here. So we have a fair value gap right here. This is our first fair value gap at this spot. Price comes to tap into it, and coming down gives us a break of structure here, and prior to that break of structure we can cite a fair value gap for our entry. This would be our fair value gap here, and price comes back to tap into it, and this is our bearish trade. So we'd put our stop loss right at this high, and our take profit at this next low right here. You can use this low here, this one at this spot. You can also use this for a maximum risk to reward ratio of 6.43 ratio. Now the next trade on our list is bearish trade of trade number 7. Now we have a fair value gap as usual. Price taps into this fair value gap, comes down, breaks this previous low, and creates for us a fair value gap here. Let me take this one out. You can see a fair value gap here. So this whole area, this whole zone is our entry zone. So we'll put our stop loss right above this high, and I'll take profit down below. So we have for us a bearish trade, and we have our take profit right at any previous low. So maybe this is our low, so we use this at 1.35908. so we have 1.35 we have 1.35908 would be our take profit. You can see at that previous low, price stops and goes back up, giving us our take profit of 3.92 for our trade number 7. Now on to the next one is trade number 8, and we have price tapping into this fair value gap and rally to the upside to give us a break of structure here. This is a break of structure here, and along the line we can see a fair value gap here. Price respected this fair value gap here, giving us our entry right here. This is our fair value gap here. This one here is our fair value gap. Price taps into this fair value gap. Let me show you guys again. This is our fair value gap here. This whole fair value gap is being highlighted for entry. So as price taps into this fair value gap, it's rally to the upside. You can also use this previous low as our stop loss. We're using this for a maximum risk reward ratio, and you can see how you might want to use this as your take profits because of this breaker right here and this fair value gap at this spot here. So price might not reach up to this area, so this is our take profits. And let's see how price moves. For a long position, we have a risk to reward of 3.02 risk to reward ratio. So on trade number 9 is right about the corner here, is right around the corner here, and we have our first fair value gap here. Price taps into this first fair value gap here as our entry. Price taps into this fair value gap here as our POI, and the next thing we'd look for is a break of market structure like so. We have a break of market structure here, and we have a fair value gap here. This fair value gap is what we use for our entry. As you can see, price comes back to tap into this fair value gap for our entry, and our take profits would be at any given high. We can use this as our take profits. You can also use this as our take profits. So using this as our take profit to give us 3.68 risk to reward ratio. Our stop loss is right below this low, and our take profit is at this high. So that was our trade number 9, and the next trade we have is our trade number 10. You can see how price taps into this fair value gap right here. First of all, price taps into this one here and creates for us a break of market structure. So any tap into this fair value gap would give us an entry for a bullish trade. But looking at this, we have a 3-minute entry here. As our fair value gap has shown itself here, we have an entry here. So looking at this entry, we would put our position for a bullish trade here, and our stop loss is right below this low. Our take profit is right at this previous high right here. You can see it's just right here. We have a 3.46 risk to reward ratio. So that was our trade number 10 on our 3-minute time frame. So the last but not the least, we have our trade number 11 right here. on Friday morning. We have a fair value gap here. Price comes to tap into this fair value gap and creates for us a break of structure for a bearish trade here. So we have a fair value gap shown prior to breaking this structure. We have a fair value gap. This whole fair value gap would have been reason for entry. So we'll put our short position right here, and our stop loss right at this previous high. Our take profit would be any previous low. It could be here, giving you a risk reward of 1.53, or this low right here, giving you a risk reward of 2.32, or you can as well use this low here, and this is your maximum low. This is your maximum, and you can also use this previous low here, giving you a risk reward of 3.23. So it's better you use a low like this because of this fair value gap here. Might take your trade back to stop loss. Let's go on to our trade, guys, and do all the necessary analysis on Gbpusd for our next trade in the following week. So see you guys on the next episode on the trades we missed last week. Peace.